Good morning, everyone. Can you hear me clearly? Fancy countdown timer, yeah? Right, let's get it started today. Thank you for tuning in. We'll start in maybe another 3 more minutes. Maybe another 3 more minutes, yeah. Now, today's training will be, some segments of it will be pre-recorded. Just trying something out, but I'll still be here with you. So this is proof that it's live streaming right now. I see you. Good morning. And yeah, I'll be here. So hopefully this gives me more bandwidth to be looking at Q&A. So that's my plan. So I'm testing out some new stuff, doing more work before the live stream. So hopefully it helps you as much as it will help me. And yeah. All right, we'll start in another few minutes. Just checking in on everyone. How's everybody doing? Good to see you around. Comment in the... this is for members only, obviously. If nobody shared the link, please do not share the link. Right? It's purely meant for us. I'm using YouTube for obvious reasons because it's one of the most established streaming platform that, well, we can also have it captioned after which, so it's really quite useful. So it's good to see all of you. Thank you for tuning in. As usual, Sundays, let's review, let's study, and we get ready for this. Yeah, we'll start in another minute. Just waiting for people to come on in, streaming in. Yeah, good to see you. Yes, Sunday morning's fantastic time. Yeah, hope we had a great week. Moving on to the final week of April already. Time flies, isn't it? Continue to stay focused to your goals. You realize time will just pass by without you realizing it. But the only thing that doesn't erode will be your habits. If you keep doing them consistently every day, time becomes your ally. Right? When time passes by, you will see the fruits of your labor. So that's the point of habits. That's the point of having good systems, so that time becomes your ally. The same way trading works as well, right? If you invest properly, have a good habit of investing, have a good habit of protecting your wealth, time becomes your ally. And even when time flies, you are actually benefiting from it. Right, so, all right, we'll start. We'll start now, and yeah, like I'm here, I'm still here. Yeah, all right, let's go. Let's start. Come, let us prepare, make some good profits today. Our market left us big clues here. I want to talk about this. This is very important. There's maybe a hidden liquidity right here. There's very important clues here as well, and that's where the blue rhythm is. So let's talk about that in today's video. But before that intraday analysis on Friday, you have to understand this particular analysis because I explained that in previous video. I'll explain it a little bit more because many of you do not fully understand that. But let's talk about that. 1023 here. You see 1023 was when we were chopping right here. This was 1023, right? All you had to do then was to wait for the cups to close, isn't it? You see the cups close, it becomes really easy because thereafter, all you had to do, wait for the pink algorithm to start building liquidity. And do you see that right there? I will zoom in later so you can see it a little bit more clearly. But absolutely beautiful trade, especially off the pink support bounce right there. Now, there's a reason why I double channeled this pink. It's very important. You have to understand. I'll explain that later, but you see how the orange is buying up. So you understand that there was this orange buyer that was participating in the day, and thereafter you had a news candle there, right? So yes, news candles matters, but you do not chase it. You still trade as structured demands. There's still liquidity here that's to be made here. Now, I will explain this here so this becomes more obvious. Now, I want you to take a look here. Let me zoom it in for you. understanding this dual algorithm setup is very important because you noticed, firstly, that there was this magenta, I'm sorry, I meant the pink, that was starting to build the liquidity there. Right, so this engulfing candle was extremely important here as well, and you see how it builds that liquidity on the breakout right here. Look, penny perfect bounce off that pink as a support, which was previously resistance. Now this is just simply called a breakout and retrace, so quite straightforward here. And this you see, absolutely beautiful, the engulfing, providing you with the liquidity for the head of the inverse head and shoulder pattern right there. Absolutely beautiful. So it was also at this point in time at 11:08 here, I told you to wait for a breakout and retrace. So don't be taking calls at resistances, right? And when you are able to identify the algorithms and see how penny perfect they are, you are able to see what's resistance and what's not. So you wait for the breakout, form that beautiful support right before it starts a big move right there. They're absolutely beautiful. So understanding this is very important. Now, why going long? Because, well, firstly, we were above the 5-day, and we talked about this in the 30-minute chart as well. Now, importantly, you understand we were above the 5-day moving average, right? And I told you we could be reclaiming that. And this was a very important clue that I talked about in yesterday's video. So please watch that later. This is pretty important. The links is in the description below from yesterday's video. Please watch that and the video prior so it creates context for you. You trade with me daily. You can understand the market context daily. You chain up my thoughts daily so you can be more careful in creating your trade setups. You're more aware what's expected, and more importantly, you're learning to develop a trading brain, which is quite important if you want to be learning to trade this, because you have to learn and understand SPY or the stock market as an entirety, right? You're learning to study something that's over a century old. Well, a stock market at least. SPY's not that old, but you get the point. So you have to understand the behavior, the context of how the stock market works. If you don't even understand demand and supply, you don't understand buying and selling, you don't understand price action. Now this becomes very difficult for you to navigate around. So watch my videos. That's the best way to learn. You don't have to learn too much technicalities for a start, but you can do that. This is a very important part of learning, and that is just to devote time to study and review. So I talked about this part, right? If you remember, I mentioned that we did not fully close the gap, even though we had very aggressive selling. Now, you have to understand the context behind this. If you were a seller, if you are intending to bring this below this range, you are a seller, you will minimally want to soak up all the orders here. At least close the gap. Because when you close the gap before the bounce, you're basically telling me that you are soaking up all the buyers before the bounce if you want to head further down, right? So you've done the heavy work of removing the obstacles ahead of your way, right? So that's the behavior of a seller, especially with very strong selling. There was a negative catalyst and there was strong selling. So if you were a seller, that's what you want to do. It's well, not in the way common sense, but it is expected behavior. And I mentioned they didn't do that. Absolutely didn't. So I told you something is up. If they didn't do that, right, it tells me that these are not sellers. These are not sellers. These are buyers who wanted to allow the sellers to dip to a certain level before it starts to push up. And you see exactly as it happened on Friday. There you go. So watch yesterday's video again. You have to have a better understanding about orders that are in the market. Right, this is not the first time I'm talking about this, which was why there's some members who managed to understand that almost immediately, and that's the thing. If you trade along with me long enough, you will understand my language. Now, stock market trading is a language as well. Even communication between your loved ones and your family, it is also a very specialized language that is beyond the generic language that we learn in school or in society. So, like what I always tell Discord members, we are a team now, right? So we're teammates. The way we communicate, especially in brevity, in the intense nature of the stock market. Intense as in it's literally moving in seconds or even microseconds. So we have to communicate sometimes beyond proper full sentences. And so when I say certain things, you're able to have a very good understanding of what I'm trying to convey to you. And that requires some form of consistency, right? The way I talk to you has to be consistent, and the way I present my information to you has to be consistent. And that is why you watch the videos daily. And I thank you for that. And that's why we trade daily together. So please do that. And I appreciate you. We're a team. Always remember that. We're working towards the same goals. Right? Some of you watch my videos thinking, you're finding enemies. I don't understand why. Right? You're a hater somewhere. You hate everyone. Right? But the truth is, you hate yourself. And that's the reason why. So I invite you to just spend some time away from the stock market in that case, right? Because it's not a trading problem. Don't use trading. And that's the same way how people use gambling, people use alcohol, people use vices to solve problems inherent in them. So likewise to you, my advice to you, do not use trading to solve a problem that you probably can't resolve with trading. Money can't solve your problem. Trading can't solve your problem. Not yet. So as always, trading will make you a better person. So you have to be more mindful of that. So Friday, quite important. Understand that. And because of that, when you identify the pink algorithm, everything becomes very easy from there. So let's see, where do we go from here? Now, remember I talked about this blue algorithm. You see it building support here right now. The reason it's not squeezing tells me something, and that is this will be liquidity. Right, so don't worry. Let's see how we can build a structure from here. It's unlikely we head up. If we do, just use the orange. Right, as I mentioned, we are still in that orange. It's a large range, yes, but you can find microstructures in the chart. But not squeezing on Friday just tells me everything I need to know, because most likely we will probably need to form another structure right here. So pay close attention. If the market retraces back, right, we will probably have to retest 5-day again, which is trending up quite aggressively before we start pushing up here. Right, we're starting to taper now. You see the blue already starting to take shape. So just be a little bit more mindful. There is some tapering in the range. You see blue already starting to build liquidity. We've retested the blue liquidity as well. Even at this 2 wicks here, you see the blue liquidity that is still building here. So we will talk a little bit about that. But this tells me that if we do have some form of stronger upsides here, you see the blue, you can be very careful because this is very clear liquidity. So just pay close attention on Monday. Wherever we open, look out for this particular liquidity here. Now, there is also liquidity here where the blue algorithm is, and you have to just wait for cups to close here. 5-day will turn into some sort of resistance if this wants to head down. So this is the first step here if this wants to head down, and the second liquidity here will be where this particular blue liquidity is right here. By then you see the 5-day already starting to trend down. Now, will we head down? I can tell you there will be a pullback. I will explain that a little bit more later. But in the event we start to continue trending up, remember the orange right now, it's still in control until we break the ranges. Firstly from this blue, right? And secondly, you will see more resistances as the 5-day starts to trend down if this truly wants to head down and grab the liquidity here, right? So at the meantime, right, watch out for the buying continuation structures here, right? Because this can slowly grind up still, and blue can still be in control, because you already see the blue building liquidity there. So it will be no surprise if it wants to trend up, then grab the liquidity there later. Because remember, if you're a bear, you want to sell at a higher price. It makes sense. If you're a seller of something, you want to sell it higher instead of selling at a lower price. So if you can allow that to happen, knowing liquidity is here that's easily grabbed, you will do it. But obviously, not squeezing on Friday tells me that this will probably pull back a little once we open at 6 p.m. later, the futures market. So pay close attention to this. Yeah, so let's see where this goes, because you've understand the liquidity ranges. It's quite straightforward that. Let's take a look at the daily chart. Now, this is also very important, because remember I told you a few things. You can watch the previous videos. It will all make sense to you. Now, the first thing I told you then was that if 5-day was trending up, Upper Bollinger trending up, you will see this happen. Now, you see it happen now. right? And when we were trending up, not retesting 5-day, I told you, don't worry, we will eventually retest 5-day. And there you go. We've retested 5-day at least 2 to 3 times in the week. So that was great. Now, the next thing I told you is that if we want to have some sort of stronger pullback, you wait for bottom Bollinger to start trending up. And I was hoping that we at least trend up above this level here. So once we get a little bit higher to this level, there may be a pullback that's coming. Another thing I told you is that we have to retest the 20-day moving average. Eventually, we have to. Yeah, you understand that eventually. But 20-day has to first start trending up. Now, I would think that we would trend up to this particular level where there is a lot of liquidity here, where the previous upper Bollinger was plateauing. Now, if we get to there, I would think it will be more likely that we had a pullback to the 20-day moving average. Now, I want you to see on every time we had a trend up. Now, I want you to see every time we trend up, 5 days tested, and once in a while, right? And I used a very rough estimation of once a month that it will retest the 20-day moving average, right? You see it here. You see it here. Once in a while, we too have to grab liquidity from the bottom Bollinger. 20-day retest, 20-day retest, right? This was the bottom Bollinger retest. So I want you to see the understanding of that, right? So wait for, I would think, the 20-day closer to where the upper Bollinger is, right? By then, I would think the 5-day will also trend a little bit closer to that before we start building more liquidity for a bigger move. Right, and by then you will see the bottom Bollinger starting to trend up. And remember, as I told you, a pullback only happens when the bottom Bollinger starts trending up a little bit more. Right, so understanding this becomes very key for you. And when you translate it in a 30-minute chart, it will make more sense. Right, so there are lots of key liquidity here. Pay close attention to that, and don't forget to watch yesterday's video and the video prior to that, so you can latch on my thought process, have a deeper understanding of what to be expecting from there. Lots of things to learn, so let's learn together. Quite importantly, right at the start of the day, we already identified the magenta organum here. Importantly, you have to understand the concept of tapering, right? So even though you see that teal may be building liquidity here, right? It lacked that buying precision algorithm. There was one here. This was quite important here. You have to pay close attention. Now, members, don't forget, absolutely do not forget to be reviewing this together with end of day summary. So it makes more sense to you, especially the timestamp that I provided here. Now, this was quite important because once there was this move here, this particular move here, when you see how teal may have formed some sort of support here, right? You see double wicks here. Let me just zoom that in so you can see it a little bit more clearly. You see the possibility that the teal may have caught that here, right there. This was quite important. But you see how magenta was the confirmation of magenta here. Now, if you were to be charting this a little bit more diligently, you see that magenta was actually in control here. You see that here, right there. So once you had the confirmation from the magenta, you know that there is an upside that's probably capped there. So at that point in time, this was when I mentioned this was quite important. At that, where was that I talked about? Let's see, end of day summary. Yeah, this was important, right, at 10:24 here. So 10:24 was about, let's see, this one right here. I had the confirmation from the pink algorithm. So this is quite important. So this is why I mentioned, hey, you have to wait now for the pink to turn into support if you want this to head up. So although you already caught the teal, yeah, so some of you caught the teal, that's fine, and varying ranges, right? So some of you may have caught it here, right? If you caught this here, fine, that works as well, right? Because you saw there's some selling pressure here. There was another green algorithm that I charted thereafter, right? So the break of that green worked as well. There is strong buying, there is. At this point here, this strong buyer was trying to buy it up here. And it managed to build some liquidity of the teal, but it was pink that was more dominant. You will realize that the teal algorithm has lost its dominance later. I will talk a little bit about that. So this becomes quite straightforward. So this is important, right? As I always mentioned, you saw the magenta already in force here. So the best kind of upside is that it breaks both your bullish and bearish controls, right? So for example, like that, this is the best, right? So, but we don't always have that, especially in a tight range. But understanding that and preparing for the magenta will certainly help you, because you see how beautiful the magenta started building liquidity here. Now, spillover, isn't it? So there are times that you don't have to be always too concerned about catching the head and shoulder pattern. If you don't see a head and shoulder pattern, in this case, where's the head and shoulder pattern? You don't clearly see it. If it doesn't exist, it doesn't exist. So instead, this is what I told you to wait for, right? So let's take a look here at the end of the summary. Back to this. Watch the instruction carefully. This was 10:06 as well. Watch the instruction carefully. 10:06 was quite some time ago, right? 10:06. This was 10:06, yeah. 10:06. Watch this carefully, right? I talked about the spillover. You see that, right? So you wait for the spillover and you wait for orange to start building liquidity. Now, if this is too tight for you, you see how orange was still building liquidity here, isn't it? And see the rejection of orange and magenta. Now, if you were to chart magenta a little bit more diligently with this particular spillover here now, because sometimes the algorithms are a range, right? So there are orders within this area here. So I talked about this, right? So I use scattered charting as an example. So you have to have some level of discretion as well, but you realize it is mostly penny perfect here, especially with the orange. So when you can understand this and you see how magenta was building more liquidity here. Now, can you see the liquidity that magenta was building here even? Right, so early breakout, that's fine. Do you see the 2 wicks here on the breakout and retracement before it starts pushing down? How many confirmation were there? Right, understanding how to be interpreting this together with the structure and the algorithms. So this becomes quite easy for you to manage a trade, especially when we started selling in the green, right? Look how beautiful it is to nurture a runner all the way down here. So this was absolutely beautiful as long as you are able to understand how to be identify the algorithms right there. Now, there was this very important trade here that I want to highlight to you. Here, this was at the, let's see once again, the teal, right? So you have to understand this. This was quite important. When you see the teal starting to be dominant here, right? So you know there's an obvious target in the 5-day moving average, right? But you don't dream of it. You know that it exists. It may not get it today. How do you tell? You use the dominant algorithm to help you. So we already know teal was there, right? We saw it coming from a mile away. This was at 11. And you have to understand this. If this wants to head down, it has to break the teal, which is a key support. So you have to protect the trade here. If you shorted this at teal, this is what it means. Because you can't afford to wait for it to turn into some sort of resistance before it wants to start heading down. And if that happens, you will see that the strongest selling will commence. So understanding this is very important. Otherwise, the other direction, it will get to the 5-day moving average. If teal is the dominant seller here, is that if it trends down all the way, you will only get it about 1:30 p.m. You understand that? So if you are too out of the money, this is where you get decay. This is where you get chopped. So you do not take something that's too out of the money at this point here, knowing that teal may be the dominant instead of breaking it out clearly all the way down. But take a look. It was at this point that you see that pink took over control, isn't it? And when you see pink taking over control, then you realize, that 5-day moving average retest is already out of reach for the day. We probably will not get there. So what do you do when you see pink already in control like that? Or even seeing magenta in control, you see the wedge happening here. Now, remember I talked about how, if we do not have a clear IHS or inverse head and shoulder pattern, you do not take a credit spread. But you see this happening. This is a pattern that will help you. If you see, in a way, it's a tapering formation with an early inverse head and shoulder pattern. So you can take credit spreads here if you want to. Instead of taking a call, because this is trending down. I talked about that. So review, right? I talked about why you, even though you know this is bulls that's building liquidity, you can tell. Can you tell this is the bulls building liquidity? Absolutely. But you cannot take a call here, because whenever you take a call here, you are going to get chopped, because this is trending down. You're taking a call, it's trending down, it's eating into your equity, it's eating into you as liquidity in order to build structure up. And you have no guarantee this is going up yet, because we are still very tightly in the wedge. And you see that for yourself. Penny perfect. We were in the wedge for a big part of the day, 3-4 hours right there. So you have to, in this case, there is a possibility. Once you already understand that the target cannot be reached here, and we started tapering at the pink, you probably can take a credit spread here. Instead, a put credit spread. So you want this to hold up. So a put credit spread, go study that. You can also watch the trading video, the previous trading video from this. I can understand what I'm talking about there. And you can just, this will decay your put credit spread. You probably get 50% of the value at least before the market closes. Understanding, hey, maybe I take the range here. You notice that there is the low of day. It's a good point for you to take your put credit spread in the range there. So you understand the tactics behind how to be taking the trade, and you understand that if pink wants to continue trending down, you will not get into too much trouble. So how do you plan your trades in that case? Understanding also magenta here as well. Right, so the point of opening spreads is that you can manage both legs. You can roll this down if you want to as well. So there are plenty of ways you can do that. But for 0 day to expiry, as much as possible, try not to roll. There is no need for that. But the point is quite simple. You are able to, well, in a way, plan where is the expected move due to the algorithms right there. So on top of day trading, and you realize day trading is so much easier than managing a spread in this case, right? Because if you're opening a spread without being able to cover your risks, or in another way we call it having it covered, it's very, very, very difficult. Very difficult in a small time frame and a small range. I'd rather you learn to day trade at this point in time, but understand the possibilities for that credit spread as well, right? Because there are more advanced strategies on top of the credit spreads. Once you have more capital, you can always deploy it in the same manner, but with less. I would think it's much easier to do that. So, for example, this is a great time for me to sell puts. So I would totally have sold puts here. And even if I were assigned, that's not a problem. If I were assigned, I would just sell some calls on top of that, after which, and maintain it as my position. So you see, the point is deploying capital becomes part of your strategy instead of worrying how to be maximizing your capital. Now, we are not in, you're not a professional trader in a hedge fund, for example. So you have no need to maximize your capital. Right, so we are retail traders now. It's so much more leisurely that we can just use or utilize whatever capital we want without having to worry about our entire portfolio returns. So you see, it's stress-free. You have to learn to manage your trades, cover your risks, so it's stress-free for you. So it helps you much better. Now, two things can happen at once, right? So you see it for yourself now. This was quite important. See it for yourself, how two things can happen at once. So you have to first realize that we are not trading a direction. When you understand the algorithms, when you understand structure, you learn to find profits in the charts. It doesn't matter where the market is going, but you see the beauty of the algorithms, right? Moving in tandem in both the structure. Let me show you. Firstly, is understanding this IHS, this inverse head and shoulder pattern, right? You see it happening already. You see the IHS starting to form, right? It was like that. And you see the pink was building liquidity. absolutely happened, isn't it? You see how we were building liquidity with the pink, right? But it was a really weak inverse head and shoulder pattern. And why was it weak? Because you understood that there was a magenta rhythm here that's building the liquidity, right? So you see, once again, we retested that yellow level, right? I talked about this yellow level here, 707, and see how I charted the magenta. Take a look, see how I charted the magenta. Yeah, like that. You have to wait for magenta to rebuild liquidity to grab this yellow level again, where you see the liquidity was being built. So two things can happen at once. And this is what we call a liquidity wedge, because you see the wedge that was forming very, very clearly right here. So understanding this, understanding the precision algorithms, right, will help you prevent taking riskier trades. Even if you're taking a trade here, see, if you're taking a trade on the break here, you know exactly where to take your profits, right? So even if this is a 0.5 point trade, still plenty of profits to be found, and you know exactly when to take most of your profits because you know the magenta was still in control right there. If you wanted to, you leave a small runner so you can reload later, so you have an open position to reload later. But otherwise, this is just very clear. So once again, remember, you are not trying to find a direction. You are trying to find profits in the charts, and that is so different. Once you're able to turn your mentality that way, you will be making money and feeding your family every day. You understand that? Now, people who need big moves, they probably need to cover a certain loss. So don't look at a P&L. Don't. When you look at your P&L and you start to trade, you will get into trouble because you're hope trading. You're no longer trading as structure demands. Right, so Monday, quite an eventful day, and I will resume this sort of trading format. If it helps you, let me know. Right, thank you very much for watching. Quite straightforward day. Yeah, let's take a look at Tuesday's analysis. It's quite similar to what you always see. Firstly, is the lack of structure when it's heading up. So this is important that you truly, and you see that later as well on Thursday and Friday, about not chasing if it's just grinding up. So a big part of what you need to learn to do is to learn to identify when is something grinding up, and to truly have that peace in your mind to not be chasing it and be preparing for structure. So the practice of no structure, no trade is a habit. It's a mantra. It's a principle you must adhere to in your trading career, right? So, well, initially as well, you notice that I charted a stronger green, right, which was identified because of this two candles here, and we lacked that selling, right? So there is some tapering here. Now, many variations can happen, right? We can start grinding down in teal as well, right? So it's not realistic to catch such a thin structure here. But if you truly wanted to, early candles, right? Because remember, there are literally a million ways to trade. It truly depends on your risk parameters, your scale, and how you discover your edge in certain ways to trade. So early candles trade is absolutely, if you are used to it, if you practiced enough, right? If you can manage your risks tight, because for early candles, there is a lot of room for you to correct a certain error, because there's still time, both extrinsic value and intrinsic. If you manage to take something not too out of the money, can be properly managed before the big move happens. So it's truly about understanding your risk and how to manage this, right? But otherwise, I wouldn't have caught this, not in a chance. And this is why, partially as I always encourage you to, is that to have a portfolio in place so that when something grinds up, right, you too are satisfied in your heart. You know that it's good for another part of your trading, and that's in your portfolio. And therefore, you don't get too anxious to want to catch a trade. So there are also many ways to assuage your anxiety. You just have to know and understand that. But otherwise, it's grinding up in orange. That's fine. Let it. Right? If you don't see a structure, by then we have already identified the pink. Right? And you see the pink was building liquidity here. Let's see. You see the pink was building liquidity right here. But we lack this. Right? So I told you, always wait for some sort of clearer structure, because otherwise there's always a tapering trade to take instead. And you notice, even though pink was building liquidity here, it was magenta that was capping at the top, and that's what we already identified. Because we identified magenta early, we were able to tell that the upsides were limited because we were tapering there. But the larger move, obviously, right? And you noticed it's still in the pink. It's still in the pink. So if you're shorting here on the way down here, you absolutely must treat it like a zombie, right? Because you notice this particular candle, this one, right, started bouncing off the pink, breaking out the teal. So this is a dangerous candle here, right? This would stop people out, right? This will make you very uncomfortable if you were in a trade, because it's quite a large range here. But otherwise, you notice once we broke out of the pink, right, and it's quite strong selling. You notice increased volume. It's just strong selling. We identified the strong seller here with the blue, right here. You notice it appeared. So this blue has participated to break out of that pink, which was a control algorithm for the bulls, don't forget that, and retested that magenta. And you see how as it retested the magenta, there is a breakout and retrace. Now at this point here, you would have, ideally, be able to manage your risks with your blue algorithm, right? So you would have still managed to capture, and obviously with the teal, right? A couple of candles, protect a position. And that's, you have to listen to me when I mention you have to protect aggressively. Especially if you're a newer trader, you don't have room to breathe. You have to protect the trades aggressively, or just take profits. That's fine. Money in the bag. The profits that you collect can be used as a stop loss for your next trade. It's a guaranteed stop loss that you can use for your next trade. You see the beauty in taking money first. So there's absolutely no problem in taking profits. You can reload later. And if you truly think this is going down, you can take more puts on the green candle instead, before the magenta was retested again, and use the magenta as your stops. So you understand the logic behind this. Just take your money first, because the algorithms have helped you to at least guarantee some protected profits right there. And thereafter, right, once again, absolutely no guarantee, right? So you just have to learn to guarantee your own success. That's what I'm trying to say, right? There's no guarantee in trading. You have to guarantee your own success by protecting your profits. All right, and by then you would have teal, you would have blue, right? And you would have been able to nurture this all the way down if you wanted to. And especially here again, once more, breaking of the teal, right? Bounce of teal, but it broke out of the teal with increased volume, right? So this seller here wants to break out of the ranges. So absolutely beautiful here, right? So there is a lot of practice you need to do this. On hindsight, obviously, it looks easier, right? But you have to practice, and that's why we're doing it every single day. When you practice every single day, right, that's what you're doing together with me, right? That's why we have this training video. As you practice, you will realize, hey, there's money to be found, there's profits to be found, even in singular candles. Take it, and you prepare for the next trade ahead. So, in fact, there are plenty of plays you can find on the way down here, because The beauty of the algorithms and structure is that it has structured, literally structured some plays and setups for you to define very clearly your parameters for your risks, for your rewards. And that's the beauty of it. Now, as we trend it down, you noticed once again, magenta building liquidity here. Right now, stray candles like this, you just have to be, you just got to be careful. And this is why you do not take puts at supports, right? This is exactly why. A lot of people will be chasing this. No, in fact, what you need to be doing is to wait for the blue retrace like that. This will be more ideal, right? And obviously, liquidity was a little thin. Right, you already saw pink maybe starting to rebuild liquidity here. There was a comment I made later on, right? So you just have to be very careful. Don't be chasing candles like that, right? So sometimes there are stray orders like that because it's a huge volume candle. If it's a huge volume candles, you can expect that a large range of prices will be filled. So sometimes it's not penny perfect, and rightly so. It's fine. Right, you cannot expect penny perfect all the time. And how do you use this interpretation to be more careful in your trades? Because after which you realize it's still penny perfect. If I were to shift this down slightly, look, penny perfect. So understanding that the algorithms are a range, right? And that's why sometimes you see me chart. I think you've seen it more often than not, right? I chart a channel very tightly together, right? You've seen that sometimes. And obviously sometimes I allow one singular line to be in between the scattered plot. That's one of the training videos, right? So understanding what scattered plotting is, right? Scattered plots. So it's a form of understanding price action. And, when it's a larger volume, you can understand why. A larger range of price is being fulfilled. It's being filled in a very short span of time. That's why you have that large variation. Now, magenta and plenty of head and shoulder patterns right here. The only breakout here was the blue. I didn't chart this, but you see it happening, right? So you could have still taken some beautiful trades here. This one was the tricky one, yeah, because it was still selling in teal. See it for yourself. Not so easy. Yeah, but if we were to chart the magenta, let me show you that. Let me just bring the magenta and chart it one more time here. This will make more sense to you. Do you see that now? Right, so teal was involved. There was a teal. Teal is still there. So you have to be more careful here now. And once we break out, you could have caught this trade. Why not? On the break of magenta, it's still a beautiful trade with teal. Right? Once it bounced up, you realize it rejected off magenta again for the second break. And then a breakout and retrace of that original magenta. Teal carrying on the selling continuation. Ah, beautiful. Beautiful trade. These confirmations will work once you have a runner, right? And you're just managing the runners. So how do you use this information to help you to manage your runners on top of your entries? And this will be so much easier when you have protected runners, right? So understand that. At this point here, you noticed, and I pointed out, that you see actually pink is involved, and the selling wasn't that strong, right? Magenta was taking a couple of, as I showed you here, a couple of tries to bring this further down, right? And we retested a very important level. That was our 5-day moving average. So at this point here, you just have to be ready because obviously there was a large liquidity involved here, and I mentioned that specifically here. Right here, right? Someone's building all the liquidity at that yellow level, right? So we know there is a major level. We know there was a retest of the 5-day. So all these major levels are still very important. You still have to pay close attention to that when we have the information for that, right? And you see how it's still not easy to catch this trade, right? Because it's still not easy. It's still not an easy trade to take, right? Because after which we just went back down here, right? So if you want to take a zombie trade, you absolutely can, right? Which was this on the teal. You see the break, right? And obviously the reclaiming of that pink. I talked about this in the daily video breakdown, so this is nothing new. Would you catch this trade? This has to be a zombie trade for you, right? So practice zombie, right? You have to practice that. This will not be a mainstay trade for most of you. It shouldn't be. There is a certain risk involved. This happens or not happens, it truly doesn't matter, right? It truly doesn't matter. You shouldn't be trying to get trades like that, because just take a look at the volatility there, right? Just so much misinformation all around. Would you be able to catch this? Only, I mean, yes, if it's penny perfect, you want to try out a trade here, a zombie. This has to be a zombie trade, isn't it? Right? Because in your mind, you already saw this. So this is a buying continuation structure. You will be expecting the market to build some liquidity on the way up. So catching this short has to be a zombie, expecting that the market wants to build more liquidity on the way. So when it breaks that orange, you'll be thinking, yeah, I have this to control my stops, right? And maybe a stronger selling will appear. Maybe teal will appear. So I'll use teal to control my stops if it wants to glide down, building a structure maybe, or end of day if it wants to just grab more buyers on the way up here, right? So this has to be a zombie trade here, right? Not realistic for you to know that this is heading down, because this is a news candle that retested a very strong resistance, and you see that happening, right? It's actually just grabbing liquidity from a lower range, taking advantage of the end of day where there will be more orders to grab and fill, especially stranded orders here, right? People who are dying out here, right? Already out of the money, severely out of the money, grabbing them and then destroying both sides. And you see what's happened, right? Later in the day. These are contextual. Yes, you have to understand how context works in price action as well. Understanding that late in day, right, there is a certain behavior. Early morning, there's a certain behavior. Afternoon, there is a certain behavior in the stock market due to the various opens, right? So obviously, London closes near midday for us. And of course, the US closes here before Asia opens right in the morning, right near pre-market. Over here, I think Asia opens and then London opens again. So the point is, I'm sorry, Asia opens here, right, and London opens here. So the point is understanding how to be finding profits in the charts instead of always worrying where the charts are going. So using context, as I always teach you about, using the algorithms to develop structure, and thereafter defining your risk to rewards parameters, right? And from there, you are able to find a million ways to trade. Later on, I will teach you as well a different way, right, to trade. Or even, for example, if you're good enough, right, you can even trade the support and resistances. Take the bounce, and make money within the algorithms, right? It's absolutely possible. If you have very strong metrics, if you have good stamina, you can even take calls here, puts, calls, puts, right? And if you get stopped out, it's quick, it's easy, because you understand your risk to rewards already, and you're able to take advantage of that. And many members, especially those trading futures, are taking advantage of this because of the algorithms here. So million ways to trade. You just have to practice, find your edge. Yeah, so I will not cover Wednesday because I was not there. So it was, and we were chopping, right? I already told you Wednesday we may chop. Someone on YouTube commented that this was a squeeze, right? But I mean, take a look. It's a chop. It is a chop, right? This is no squeeze, right? Because this, if you remembered from the 30-minute chart, this provided that head that we wanted for the head and shoulder pattern for Thursday. And that gave us the absolutely beautiful trade down on Thursday, right? Because you understood that this was liquidity building, and they tried to grab liquidity from the top after soaking up all the sellers here to grab it down. I'll cover that in the next part, the next section here, right? So let's carry on. Thursday was a great day because you understood the understanding here, as I was explaining in the prior video about soaking up buyers here, right? So I'm sorry, I mean soaking up sellers. When you do it in pre-market low volume condition, right? This happened more than once. You've seen that happen more than once as well. But more importantly, you have to wait for some sort of structure, as always. Let's take a look at the structure on Thursday here. When you see that right here, you see that the yellow has already started building liquidity. Now the struggle here was knowing that there isn't a structure to start going long. You realized on Thursday, I wasn't keen on going long. So once again, members, please review here, so you can understand the thought process here, right? So I was a little hesitant to go long because you don't see any clear liquidity, you don't see any clear structure for going long. We were just, if you were seeing the charts here, we were just literally just grinding up in the magenta here, isn't it? When you understand that, right? And obviously, we were not closing cups, right? You don't see cups that are closing, right? The only time we closed the cup was above here. But even so, I told you, you have to be careful of the magenta. And by then, the yellow has already started showing. So we had a very clear starter position here as well. Understanding that, right? So there were no clear, and that's what I always tell you, even if it's trending up. Now, if you have the mindset that you are missing out on a trade, right? If you have the mindset that you're missing out on the trade and you start to chase, you start to look for longs that don't exist, I'm sure you could have caught a few points. But generally speaking, you'll be missing out on a bigger move, right? So for me, I would have never worried about this grinding up, right? And you think you're missing out, you feed yourself lies, you feed yourself destructive thoughts. No, you focus on the charts. You focus and trade as structure demands, and you find profits in the charts. And that's a problem with some traders, because when you see the chart grinding up, you think you're missing out and you want to jump in. Instead, what you need to be understanding is to be looking out for more structure, right? Is there a structure to build a trade? I think there's still some structure to go long here, right? So you see the teal has been building liquidity. It looks great now. Yeah, it does. But truthfully, it's very difficult to find some imbalance here to take a trade, right? It's still chopping in nature. But certainly you could still take a trade or two with smaller risks, because yes, orange did still appear here, but they were all limited by magenta. And identifying magenta was so crucial, isn't it, in understanding this? And now next thing will be obviously the yellow, because this was excellent here. Now look, we are able to pinpoint penny to the penny right here, right? All you got to do is understand how to be trading this. Now, once you see the pink building liquidity here, more importantly is that we have already broken. So at this point here, is pink more in control or is yellow more in control? Let me ask you that very simple question, right? Disregarding the volume profile. You understand that this is yellow more in control. Can you understand why? Because firstly, pink has turned resistance. Pink has turned resistance, not even the upper band, the lower band pink has turned resistance. If this wants to head up, pink has to be support. It makes more sense. So pink has turned resistance after we have seen that the yellow has taken control here, and there was an upper pink that isn't even tested. And you see that this is starting to rebuild liquidity as well off that right shoulder here. The only problem is your trade entry, right? Because if you want to have a clearer trade entry, if it were me, I would have waited for this. Why not? This would be a very good trade if I had more confirmation on the rejection here. But so be it, right? If it wants to wedge and it starts to dump on the wedge, you stay focused because there's still plenty of profits to be found. Let me show you that. And the first one is once it broke out. So remember I charted the green algorithm quite closely like that here on the day itself. Right, so when that dump happened, this large red candle, you stay focused. You see how the yellow was still being resistance here. You could have caught a trade on the large green candle if you wanted to see a bigger dump, right? And exactly as it is, it formed that green because we had the green algorithm right there. Absolutely beautiful trade. You missed nothing, right? So even if you missed this, thereafter you saw the green seller. This green seller was very interesting because you needed this, which we identified quite early in the morning, right? So they participated. They were there, but just waiting for liquidity to be built before they reconvene into the market auction right there. So understanding this, if you wanted to chase, right, this was possible. And if you truly wanted to chase this, what should you have done? You should have been looking for green candles and when this is resistance, right? So here, possible trades. I wouldn't say they are the best trades, but if you truly wanted to chase, right, instead of chasing without a plan, right, you can scale down, chase, just get in quickly, get some money if you want to instead of catching the full move. Why not? Right, so the idea is trade as structure demands. Even if you're trying to chase trades or taking reckless trades, you will be fine, right? Okay, next one. Even if you miss that, that's fine because you see how yellow started rebuilding liquidity here, right, together with magenta, and all you got to do is to wait for the breakout and retrace. Take a look at the number of wicks there, the retracement. Do you see the breakout and retrace here? Still in the green. The green was guiding on the way down. Absolutely beautiful there, right? So now at this point here, you could have caught zombie trades. Yeah, absolutely. So say you wanted to catch a zombie trade here, right? You notice once we broke out of that green algorithm, you could have still caught a few nice candles, isn't it? So the same logic here. Once we broke out of the stronger, you could have caught some candles here as well, right? Take a look. You could have still caught one very good, beautiful candle. Yeah, but obviously there was a blue algorithm here, so you do not try to catch this. Not as much as I would like, right? Because the blue was in control here, right? So you probably would have missed this large candle unless you know contextually what you're talking about. So remember I talked about how contextually we will return back to 706 here. Yeah, I talked about this, right? Returning back to 706 because you understand once we lack. So once we stop selling, you see that there is a large green candle and the selling has some sort subsided. We have also reached a very important level where we closed the wicks here instead of closing the gap. I do mention that there could be a structure here. Ideally, personally, I would have waited for a structure to start forming like that, right? So it's absolutely fine to miss this. No shame in that, right? So you have to understand how to be trading as structure demands, because if you manage to catch this trade, right, you charted the blue, right, and you've managed to catch this, especially once it rebounds back off that yellow, this is still a beautiful move. You could have protected it within minutes once this large green candle formed and it started grinding up in the magenta. You nurture your runners. You could have still gotten very beautiful trade here, right? So you don't always have to catch the move. If you wanted to catch the big move, you have to be very risky with taking zombies. And sometimes it works, sometimes it doesn't, right? If you're training yourself and you realize, as I mentioned here, if you took a call on the break here, right, which isn't very clear, So I charted this out a little bit more, I think. Yeah, you see it's still in control. But if you manage to catch a bounce here, you could have still protected the trade quite sufficiently before it started heading down. So I want you to understand your psychology behind here. Now, if you're trying to catch the reversal, instead of finding profits in the charts and protecting your position, you will get in trouble, right? Especially when you caught a reversal here. But if you are trying to find profits, this is good profits, while you keep smaller runners hoping for a bigger reversal. Understand that, right? So don't get fooled by candles like that. No, you have to continue trading as structure demands. Right, so quite a straightforward day. This was a very important day. I want you to review the analysis so you can understand the context. The market was really kind. There were lots of moves here, and you could have seen how we have caught, firstly, prevented from going long here too heavily. You see how we caught the yellow. You see how we caught the retrace here, right? The continuation, and how you understand the bounce because of context. So lots of experience that you can learn from here. So please do that, yeah, on Thursday. Friday was quite straightforward. Firstly, we understand the context, as I talked about the context here, right? So remember, I talked about the context of not closing the gap, right? So that's important. I want you to watch the daily brief for Monday. It's the YouTube video that I made in preparation for Monday. Watch that. You have a better understanding of what I'm trying to talk about. To watch that video to understand the context there, right? And thereafter we were waiting out for some structure here. Now, I want you to see here. Now, once we rebuilt this pink liquidity, it becomes straightforward. Now, let's take a look at some trade choices. And this comes as no surprise to you, isn't it? Once teal, you see that there was no structure to head down. Now, if you're looking for structure to head down, you have to wait for an inverse head and shoulder pattern, as I mentioned, or you wait, as I was talking about here, right, the 5-day moving average retest. This is important because you already know that teal was in control, right? So you see teal in control. So you have to wait for teal. So you see, even with the 5-day, 5-day was here at that point in time. You have to wait for teal to break out of that 5-day moving average. You understand that for more downsides, or you're just waiting for liquidity to start building. Now, at this point here, we identified the magenta, which was a lifesaver. Because if you wanted to short this, right? Now, even if you shorted this here, this was not a bad short, right? And you would have used the teal to guide your trade, caught a few candles. If it's enough for your Friday, call it a day, that's fine. But you realize we lacked the structure. And I always warned you, you have to wait for major levels retests or wait for the strongest seller to appear with certain structure. And you don't see it happening. In fact, this is pretty good. If this happens, if the teal breaks out, right, and we have stronger blue coming out to retest the 5-day. And even if you miss this, there's always a retest of the 5-day moving average that you can wait for. So there are some of you that rushed at this because you saw these red candles, even you know that magenta was in the way. So as I always encouraged you, trade as structure demands, and you see it for yourself again. So see it often, and you will be able to realize, yes, there are certain adjustments I need to be making in my trade. And sometimes, as I always encourage you, even if you miss the trade, so be it, right? And you see it for yourself, because the times that you got it wrong while chasing the candles, you realize how bad it is, right? Not only do you get a very bad fill because you're taking puts on supports, which is terrible, but also you missed out on the larger move right here, right? So I know some of you tried to catch this, but why? When we have penny perfect magenta, and that's your advantage. You already have penny perfect algorithms. Why are you not using them to your advantage? So in fact, what was building the liquidity in was the pink, and we identified the pink already. So once you identify the pink here, now it's important, members, right? Just check out the end of day summary. So it makes more sense to you as you try to tally the analysis and the trading videos together, right? And even at this point here, there was no need to chase. If you wanted to take a zombie trade, right? You see how we broke out of teal, bounced off magenta. We had a bounce of teal. You could have taken a trade here. I would rather you take a trade here than to take a trade here, right? Because there was certain risks here. But you could take a trade here after that bounce, but you will be caught in the wedge as well. So there is a certain risk to reward you have to understand. But you understand this, right? Taking a call here as a zombie, it's not a bad idea because you see liquidity that was building here as well off that teal. So there are a million ways to trade this, but I obviously on Friday wanted to wait for a safer trade. And I always tell you there's always a trade ahead. So imagine after this green candle formed, I do not have a trade in. You're not worried because you're always prepared for the trade ahead. And I've shown you that time and time again. Let it close the cup. And once it closes the cup, it becomes very easy. Once it closes the cup, you don't see any clear structure here. Not yet. You only see the rebound of that pink organ, which says something anyway. So this is not too bad if you wanted to catch a trade here. Yeah. The point about this is that if you want to catch a trade within here, you have to protect it as soon as possible. Get into a position you're safe, and then you can wait for things to play out. So if you're taking a trade blindly, without structure, I always encourage you, protect it early so that you are stress-free to assess what's going on. And that happens with most of you because you will only get better and you will see more things as you get better. But in the meantime, before you get to that stage where you see more, you have to just get yourself stress-free as fast as possible so you can actually have the bandwidth to see for yourself and to assess. Because after which things become quite clear. You see, if you caught a trade here, you protected it, you could assess, but also you have to understand where your stop losses are. So you have to ascertain that as well. But you see, take a look at this, right? Once we recharted, we had that beautiful inverse head and shoulder pattern inverse head with that engulfing candle. What was resistance at the pink here turned into support because this was a breakout and retracement, right? And I talked about that breakout and retracement as well, right? I talked about it here, right? You have to wait for that. And once you see the breakout and retracement happening, right, this becomes very straightforward because you're just waiting for the news candle to start going out. And it's rigged. I'm sorry to tell you, but it's rigged. They know exactly what's going on and they had to build liquidity for this, right? And once again, you see, it's the perfect cup and handle. And this is not the first time you see this. If you trade long enough with me, you will see this happen again and again. Now, once they caught this, they would have trapped a lot of liquidity, right? And remember, I talked about the intern candle, right? So this is a likelihood of a Friday intern candle. If you don't understand what I'm talking about, last week's video, please watch that. And you see how the pink starting, look how penny perfect it is. You have the advantages of the algorithms. You cannot be over trading. You must know what you're doing exactly, right? So just take a look. It's just penny perfect. And there's one more trade here if you truly wanted to pay attention, right? And that is, you see the teal started selling, right? Has it broken magenta? Not at all. Why do you want to short this? Not at all, right? Because you noticed the main liquidity was here when we broke the cup. So the short will be like that, right? Breaking that, but no, it's not happening. Why like that? Because you would have also broken pink. Understand that. You see the pink that was in control throughout the entire afternoon. So no reason to short that. In fact, once it started selling in teal, you may see there's an opportunity to start taking a possible squeeze near end of day if this truly is building liquidity for the bulls. And so you see that happening, right? So let's see. You see teal selling, and I mean, you will see clearly for yourself. You're here long enough to see that, right? Build liquidity here, and take a look. It's still building liquidity. This is a dual algorithm setup here for the bulls. Do you see the dual algorithm setup? Absolutely beautiful, isn't it? Even if you wanted to catch this final trade here. Now, This one, not so. This was a candle I would never have caught because, firstly, we were building liquidity here, like that. No structure. I would have waited for something like that. And you realize, yes, exactly why. Because it doesn't sustain because there isn't liquidity here, right? Because if we built something like that, this may sustain even longer than this. And that's exactly what happened, right? We built more liquidity to try to push it up. So understanding this, right, you realize that there are lots of trades you can take. Now, if you want to take advanced trades, say you understand your metrics, right? You understand your risk to rewards. You understand the number of contracts you can take on risky situations. You can always take on supports and resistances, right? So there are a million ways to trade, but you have to first know your metrics and you have to know your risk to reward ratio. All these metrics you have to understand. How do you scale up, scale down, and then you can attempt any trade you want within the trading floor, within the strategy of the algorithms right there. So this is extremely important, right? So what a simple Friday, right? Quite straightforward. The market was actually very kind with us here. So review this very importantly, yeah. Right. Since you're still here with me, thank you for watching. I will be answering 2 questions. So since you are still here, give me a minute. Let me just grab a drink. Give me a minute. All right. Thank you for truly thank you for tuning in, even all the way to the end. I'm going to make sure that you're going to learn something today. All right. So I will cover two things, 2 questions. Right. The first one will be the shifting of the algorithms. Right. You noticed, there's sometimes, right. Now, a very, very, very tight algorithm, especially a very, very strong seller or buyer, right? It's mathematically a little bit more difficult for it to adhere to that. Because if it's a really strong selling, right, if it continues to just slide down the strongest algorithm, you will realize how much more difficult it is to maintain the algorithms. And so sometimes, yes, you do see me shifting the algorithm slightly. Now, it's the same seller. It's the same seller, but I'm just trying to increase the precision, right? So understanding that this is just increasing the precision, but as long as you notice the accuracy is still there. How do you reconcile this in a real trading environment, especially when the candles are moving very quickly? Here's a tip. You'll learn something new today. Now, there are few sellers. As I always tell you, there are always a range of sellers or range of buyers, right? That's why you have different algorithms. But now let's take a look in this case. In this case, we have the green and we have the blue. All right. Technically speaking, there are many more algorithms between this in terms of angles, right? Between this blue and the green. But they may not be extremely meaningful, right? So how do you tell when the green will reactivate? Is understanding that it is still within the control of the blue. Now, this doesn't look so meaningful like that, right? But follow me now. If you are able to use your sight reading and see it for yourself like that, when you're able to chart it a little bit more properly, see this green is going down, but the blue has allowed it from a support to turn to resistance. See that for now, right? Let me do one more. Yeah, let me bring the blue down slightly more again. Yeah. Now, do you see? Although the green has somewhat lost some precision, but do you notice the blue held on? This previous support has turned into resistance. And so this is when I know, oh, I have to rechart my green. If the green is not in control, right, that's fine. I will cut more of my runners because I will take profits first. I can always reload it later when there's a certain structure. because blue may not be as lucrative as green. You understand that logic there, right? So this is important, right? This is how you need to learn to sight read using the different kinds, the different strengths of the seller in this case going down. Now, another question I want to answer will be about nurturing runners. What does nurturing runners mean? This week was a very special week because we saw a lot of selling. Right, a lot of selling on Tuesday, on Thursday. Friday, not so Friday, we started bouncing. Right, so there was some buying too, but buying mostly in a grind up. Selling is more exciting, you would already realize. So let's talk a little bit about nurturing runners. Now, we're trading 0-day to expiry options, right? We're trading 0-day to expiry options. You have to understand the idea of trading options. Your objective of trading options is to get something that is out of the money to at the money and deep in the money. Once you're able to do this, right, this is where most of your profits will be. When an option is out of the money, entering into the money, this is where most of your money will come from, right? Because of your delta. Your delta will increase, but your delta will start to reduce. That's your gamma. So you have to understand that the rate of change of your delta will start to decrease as it gets into the money. All right. So for example, if this is out of the money, let's say it's at 0.3 delta, you enter 0.5 and you enter something deep in the money, 0.8. The rate of change starts to reduce. So you have to understand the point. Once you're able to increase, once you're able from out of the money, entering into the money, you have already, in a way, taken a bulk of that profit in that calculation of taking an option. So that's why I always tell you, you remember when you observe my trades all the time, I always say I am too deep in the money, so I'm taking profits. You understand that, right? Because if it wants to go down further, for example, say I took a trade here, all right? I took a puts, maybe 705 puts, all right? That's out of the money, right? And once it gets in the money, all right, and well, of course, time matters as well. If you're in the money at 2 p.m., if you're 2 points out of the money, and you enter into the money at 2 p.m., it's very lucrative, very lucrative, right? So understanding the intrinsic value, extrinsic values, understanding how the strike prices work, right? Understanding your delta, understanding your gamma, those are very important things you have to understand about options trading. So that another time, more in detail. But if you know what I'm talking about now, that's great. If you don't, let this be a primer for you, so you can have a deeper understanding next time. But I always tell you, I'm too deep in the money. I want to take more profits. Because if this is further going down, right, I would rather take a 703 put and from out of the money, let it enter into the money again so that I can make the bulk of the rate of change. You understand that? So the point is, especially when you have the algorithms, right? How do you nurture? Now this one is a little bit more difficult, right? Because it just went straight down. You have to be very, if you truly really wanted to chart this, right? You have to chart multiple green algorithms here, right? But let's use this as an example. Let's just zoom it in so you have a deeper understanding. Let's zoom it in. Yeah, let's just use this one as an example. Yeah. So say you were lucky enough to take a put here, all right? When it reaches the support, take profits, reopen them at resistance again, take profits at support, reopen them at resistance again, right? And maybe with every iteration from here, you take one strike a little bit out of the money, right? So you're enjoying that full spectrum like that. So obviously that is the ideal condition right? It's really difficult to do that on the trading floor. It really is. So you keep to your own strike. That works because you can mentally calculate your cost basis much better. Your broker platform will also calculate your cost basis, your average cost in that case as well. But the point is nurturing your runners using the algorithms and using the context of understanding the pricing of options, right? So this is the same technique you use for your final 10 minutes trade. And remember, as I always tell you, final 10 minutes trade. Let's take a look at Friday. I like Friday. I wasn't there, but I saw the trade. And, you know, it's fine. It's Friday. You're not supposed to be chasing anything. I saw this on Friday, but I'm not ready to take the trade. But I explained this earlier in the training video, yes. Like that, you saw that happening, right? Especially in the final power hour squeeze. So in this case, right, it's the same sort of calculation. You do not take something that's too in the money. What are your risks? So for example, if you wanted to take a call here, imagine if you took a 713 call, okay, you think you're safe, right? And you probably paid, I don't know, $5 for this. Just for example, just for basic, simple calculation. If this turns to zero, your risk is immense risks, right? But if you think it's going to retest the high, right? Because if you see a certain structure here, hey, this structure is pretty nice. Yeah, and I always tell you, take maybe 2 strikes out, right? So 2 strikes out will be about, 714. So if you took a 714C, right, this will probably be priced at, you'd be surprised, 30 cents, 50 cents, something really good. And once it gets to this point, this becomes $2. Or even if it goes deep in the money, it goes absolutely bonkers. 400% here, 4x. So understanding pricing of options from in the money, from out of the money, to in the money, right? When you understand that, when you understand expected range, right? And I've taught you this many times. If this is heading up, who do you think will be buying? If you want the person to be buying, it will be orange. Can you calculate? Is it possible? Is it realistic that orange can get to there? Absolutely, because you understand the algorithms can help you chart the time and the price. That's the beauty of having the algorithms, because you are able to see it in 2 dimensions, time and price. I've taught you this many times, even prior to this video, prior to this section now, right at the start of the video. I talked about the expected run to, was it Monday, I think, right? I talked about the expected run from the teal. If teal was dominant, you know it's going to retest 5-day at 130. If it continues heading down, you understand that. So using the algorithms to plan your expected range. Sometimes, yes, it's a gamble. Yes, everything's a gamble, right? But you have to be intelligent about it. And it becomes less of a gamble when you are able to calculate the risks, right? The word gambling is a misused word, right? If you're able to have a proper calculation of risks, you will be safe. Everything is a gamble, right? You drive on the roads, it's a gamble. There's always a probability of something happening to you, right? But you are trying to reduce the risks by having good driving habits, by, you know what I mean. So the point is, with more skill, right, and obviously better skill, right, like driving, if you have better skill, you will be more defensive, you'll be more avoidant of anything happening to you, right? Understand this, right? So it's also the similar technique used in the final 10 minutes, right? Okay, obviously I will be touching more about that in detail, right? But it's a good primer. Go study on that, right? Understanding, you just have to understand the rate of change of the price of options, right? So rate of change will be your delta, and then obviously your gamma. Yeah, that's about it. Don't need to know more, right? You need to know what you need to know to make money. All right. Okay. Okay. Last question. Right, delta. I've talked about it many times, right? Early candles, the intrinsic value stage. So remember, I mentioned that. I just mentioned that in today's video. The intrinsic values and the extrinsic values are still very fresh, especially at the start of day, the early candles. So you can afford more margin of error. So if you take something that's way out of the money, that's fine, because you're trying to find the arbitrage within the quick moves, right? So if you are trading early, I would advise you to scale down, because firstly, you don't see clear structure yet, and secondly, you're not truly enjoying the rate of change in the options price, because everything's still fully loaded, right? Your extrinsic value, your especially for 0 day to expiry, it's still fully loaded for the day, right? You want it to decay as much as you can, and using the algorithms to see if there is an expectant move that's out of the range. If it's out of the range, that's where you probably find good profits, right? So if you're a risk to reward kind of trader, right? You're just taking trades based on good metrics, good risk to rewards, right? In a way, you're like gambling. You don't mind a higher losing rate because you have a higher rewards rate. You can absolutely still trade, understanding to trade later in the day. Right? Some of you just survive. I know some of you are just taking trades in final 30 minutes of every day, and that's great. That's not a bad thing, as long as you have metrics, as long as you know what you're doing. But if you're full potting every time in final 10 minutes as if it's a gamble, no, you're not doing yourself a favor, right? So understand that. Now, one more question, right? Is to what is that? Oh, I have some. I lost my train of thought. Wait, give me a minute. Yeah, all right. Talking about reversals, yeah. I don't like to take reversals. Simply put, continuation is always the easiest way. Your mind, it's just like driving a car, right? Or commandeering a ship, right? So if you want to change direction, it will take, that's inertia. It takes a lot for you to change direction. Likewise for your brain, right? So the market, especially when you already taken puts, for example, when you confuse your mind by calls, puts, you are going to be a wreck on the trading floor. You cannot do that, right? If that's why I always tell you, I'm training you every day. Continuation is best. And if there's no continuation, what do? You take a zombie, right? So zombie. In between the zombie and the continuation, so you realize there's 3 phases here, right? The continuation, then there's the zombie, and then there's the reversal. So you cannot, from continuation, go to reversal, right? You will be wrecked. Mentally, you will be wrecked, because if it doesn't pan out, right, you will start to destroy yourself by going both directions, right? So you have to be very clear. Is it going down? Is it going up? And sometimes it doesn't matter, because sometimes, as I always tell you, you're finding profits in the chart. And if I can make my money within any of this phase, I call it a day. Then maybe I regroup, wait for the market to give me more confirmation before I start to take the second trade. So you don't always have to know where you at. You don't always have to. If you don't know where you at, then let the market show you. Let the market reveal it to you. You understand what I mean, right? So it's absolutely fine to not know where the market is trying to go. And see, that's the thing. When you, in your mind, if you keep telling yourself, could this be a reversal? Could this be a reversal? You wreck yourself. You don't know. You don't know because the market hasn't shown you. You don't know because you haven't seen it. You don't know because you don't know. That's the thing about trading. You think you know, and then you give yourselves false positives, and then you start to develop bad habits. So the most important thing is to humble yourself. You do not know what you do not know, right? And then from there, that's how you review. That's how you gain experience. That's how you get better from there on, right? So psychologically, you need to remember. If you don't, I always tell you this, if you don't see anything, it doesn't exist, right? And you will get better in seeing things. And then you have to practice. And because when you practice, you will see it better because you get involved in that practice, right? So understanding this phase is quite important, right? All right. Okay, one more last question. Let's go. Yeah, in the past, I used to be able to nurture runners, not anymore. After the surgery, I can't do that anymore. So that's fine. I'm all right with that. I'm at peace with that now. Sometimes I do, especially when I'm well rested. But be at peace with yourself. Yeah. That's what I mean. We are at different stages of our lives, right? You will peak at certain times as well, and then you will plateau. That's fine, So know yourself, know your edge, but always have a baseline of making money. And this is what I'm always trying to teach you. If you're one and done, right, that's your baseline. Because if things don't work out psychologically for you, right, the technique is there, the skills are there, right, but sometimes it just doesn't click, right? And likewise for sports as well, right? If you're playing golf, there are just times that it doesn't click, right? You're playing all sorts of sports, or you get what I mean, right? But your baseline never moves. Remember, it's always about falling back to our training. And you must always have that bread and butter, right? So for me, my bread and butter, one and done, right? My usual head and shoulder patterns, my usual cups and handles, right? If I don't feel like scalping within the ranges, if I don't feel like taking zombie trades, if I don't feel like taking risky trades, my baseline is there for me to take profits and feed my family every single day. So for you, build your repertoire for trading, right? Build your different levels. Some of you are really good at some things, right? So level 1, what is it? Level 2, what is it? Right? So build a foundation, build your baseline, and you will get better from there, right? So sometimes you get very aggressive. To me, my final 10 minutes it's up there, it's my final 10 minutes trade is something that I will only undertake if I happen to feel good about myself, if I happen to make a lot of money for the week, and I can afford to just take some part of it to gamble, but otherwise my baseline has always been there, right? If you've seen me trade for years, my baseline is there, right? It's always the same head and shoulder patterns, my inverse cup, but I'm showing you today's video, specifically, I'm showing you a million ways to trade this. Right? There are times back then in the past, I would have taken calls, puts. You remember that, right? If you're with me right at the start, right? I would make crazy scopes because if there's a chance to make money, you make money. That's what I could back then when I was, sharper. A little less sharp now, but I feel myself getting back. But be at peace with yourself. And most importantly, have a baseline. You still make very good money if you have a baseline, right? Everything else is just having fun, right? You come to a point, right? It becomes challenging yourself. It becomes trying to challenge your edge, trying to push your limits, trying to have fun because it gets boring. The point is, a million ways to build a repertoire. So do that. This is your career now, right? So you have to develop a playbook for yourself. You have to develop your skills. You have to know yourself better, right? I can teach everything, but you don't have to be using everything because you may not be good at everything, right? So this is like a skill tree, right? You pick and choose the skill tree. Where do you want to go, right? If you don't know what I'm talking about, I don't know how to further explain this, right? But go check out what a skill tree is. All right. Thank you very much. Right. It's better. I feel that this mode of doing that. Let me see what more I can do. So please know that I'm continually trying to improve this. I know things are not perfect yet. Thank you for giving me time, of course. Still trying to work on things. So anyway, thank you very much, everybody. I will see you closer to opening bell. Yes. All right. Thanks. Truly, thank you for tuning in for an hour and a half. As always, your time is very precious. I really, really appreciate it. It gives me strength on Sundays to do this, knowing that there is an impact that I can do. Right. So I really appreciate. Thank you for being here. I truly am very grateful. But most importantly, use this information, right, and do your best, right? That's what we work hard for each other for, right? You're here, you're working hard for me by being here. And likewise, I will work hard for you. And that's how we build each other up to reach our goals together, right? So new week ahead, right? Realign yourself, recalibrate. We got this, right? Start new, right? You start the week green because you start without making a loss, right? So for most of us who are still, for some of us who are still trying to get consistently green, delay your first trade of the week as much as possible, right? So that means you wait for clear structure, because as long as you start the week green, right, that's only one way up, because you start to be very, very, very conservative and preserve your profits that you already made. Now, most of the time, if you're red for the week, from what I observe in what you share with me, is that you're always rushing trades. And once you start red, it snowballs. Right? So delay your first trade because you start the week green. You realize that, right? You start the week undefeated. And you delay your first trade because you want to make sure it's a win. And when it's a win, you preserve it and you protect it. That's how you do it. Yeah. It's strategic, right? There is a flow behind it, right? So we got this. Let's start tomorrow, the new week. It's the final week of April, right? Before we go to May, we got this. Come on, hang in there, stay focused, right? Every week you're here with me. Every day you're here with me. This is the same message. Stay focused, feed your family, know your objective, and this is how we get it done, right? If I have to honor to be walking with you in this journey till the day I die, I will. And you see me doing this. Well, technically speaking, I almost walked with you till the day I died. God decided not for me not to die on that day. I'm still here. So let's continue, right? Let's continue this. We got this, right? Long way to go. You walk with me, right? You don't. Firstly, you can slow down, yes, but you don't give up. You do your best, you stay focused, you continue walking with me. I almost died walking this journey. You continue staying with me. Right? Just stay focused, stop reckless trading. Please stop reckless trading. And most importantly, focus on your objectives. Study, review. All right, we've got this. I'll see you closer to opening bell. Thank you very much. Thank you again. Thank you.